Hello, folks. Brandon Chapman with you today. It's another edition of the Theo Night video for November 4th, 2024. And boy, we have an election coming up tomorrow. What are the vol markets telling us? What should we expect? That's what we're going to explore today in this video. As we look at the ES, we basically on the futures, we have a long-legged spinning top where the open and close are virtually the same price. We're going to finish down from Friday's close slightly. But you can see the range, and overall, we're kind of coalescing around this 57.50 level. As we look at the sectors, you'll see that energy and real estate are up the most here today at over 1%. As we look down here, S&P is finishing towards the middle, with gold outperforming, albeit by a little bit, up slightly at 0.14%. What does this all mean? Well, the reality is we have an election tomorrow with which the outcome is relatively uncertain. We have this internal back and forth at TheoTrade in our side Skype chat about who's going to win. What polls do people share? You know, are the predicted kind of markets? Is the money where the mouth is markets going to give us an accurate picture? And the second question is, when are we going to get results? There's so many uncertainties going into this election, not only about who will be elected, but when they will be elected. Is this going to be a hanging chad moment where we go to the courts for the next several weeks and we wonder whether or not we're going to have a president by Inauguration Day? There's lots of uncertainty out there. And I liken this a lot like corporate earnings, right? Corporate earnings, they could come out, they could beat earnings and revenues, and the stock go down because of guidance. They could miss, and all of a sudden guidance is up and the stock goes up. And all these various scenarios that play out, this is exactly like what's going to happen tomorrow. We're not going to likely have a clear winner by the end of the day. Who knows who's going to stop counting ballots and the maelstrom of various challenges that are going to occur in the coming days to weeks, maybe months before the actual inauguration day in January. So, but what do we know about this scenario? I looked at today's move in energy being up 1.75%. This is an area that I've been bullish on for the last week. And it's one of those things where, do we know something about the energy market? I guess so. We know that we are pretty undersupplied in oil. We know we're not going to get out of that very quickly. And the chance that oil prices rise in the near term are probably pretty high. That positioning makes sense to me, you know, as being the top performer today. And frankly, the top performer, if you sort by week here, it is the second best performer behind communications over the course of the last week. There's another area that makes sense to me, and this is the volatility markets. One of the things that we know about earnings and companies is that short-term volatility ahead of an earnings is elevated. It's the back week, the back month that is lower. So we see this drop in volatility over time, or sometimes again, maybe today it's just going to be a drop for a week or a month. And so we look at the VIX. We'll see if it loads today. It's not loading. So we'll go to the trade tab here on VX. Wasn't loading earlier today. I thought I'd take a chance again. And we're going to see that the active contract right now is the November expiration. Then we look at the next expiration out in December. So we go from 19.45 to 18.71 to 19.08, 19.22. What you'll see is, and I'll go back to the chart over here, that the current pricing for the active contract in November is higher than virtually everything going out till June of next year and July, where it jumps up to 19.5. Right now we have the November expiration in the futures, the VIX futures market is over 19.4. Isn't this exactly like an earnings scenario where front week volatility is high? It just so happens this is not a individual company's earnings. This is the market. And so we see up here the short-term volatility for the active contracts up here, and we see this big drop to December, and then it starts to steepen out. Again, what we're seeing is that, yes, there's expectations that volatility could be high tomorrow. But guess what? We're expecting volatility to fall quickly. And this is the point that we have to realize. And this is something that over in earnings we have to understand, is that while the front week volatility may be high, it's going to go to zero by expiration, right? The volatility is going to get crushed. And then the next week, so what happens is we see the volatility normalize after the earnings. And what does a normal volatility curve look like? It looks more like this, where you have up sloping, where we're going from December to January to February. The volatility is rising as we move out in time. So what's going to happen tomorrow? Again, likely we're going to see volatility come down, at least for the near term. Now, what does that mean for the VIX? If we look at the VIX, this is looking out 30 days, and it's presently at 2022. Okay, we're pricing in decent amount of volatility, but again, we have an event, right? We have an event tomorrow. We may not necessarily know by the end of tomorrow or the next day what the outcome may be, but we're going to start to see the market's reaction. And the idea that the VIX may come in is a very real possibility. And I'll take a look at just one trade that happened today in the VIX that kind of indicates this a little bit. And so what we're going to do is we're going to take November 20th. Okay. It's kind of a busy, you see a lot of stuff going on here that can be a little bit intimidating. But when you start to break things down, and for this, we're going to come down to time and sales, and we're going to focus on the November 20 expiration. Okay. And what you'll see is there's a series of spread trades that are very sizable that did occur today. And so you can see all these kind of spread trades in here. We're going to look at, for example, the 15 and 13 and a half, 85,000 contracts, all part of a spread traded at the exact same time. You'll also see what? You'll see a 20 and a 17 that occurred at the exact same time, 9 o'clock and 43 seconds, right? But we're going to zero in here and talk about it. So we come into Nov 20, and what do we have? You'll notice that we have a 17 and a 13 and a half. I think I'm right. Sorry, 15 and 13 and a half. I'm like, that doesn't sound right. 15 and 13 and a half. There's 257,000 contracts traded today against 396,000 open interest. So we could take that at face value and say, okay, we'll just assume they're closing the 15. But what did they do? They rolled it to the 13 and a half. Okay, they're either buying this back and selling that, just rolling a short put, or we may see some additive action here to the open interest where they buy the 15 and sell the 13 and a half as a spread. Either way, what are we talking about? We're talking about a potential drop in volatility playing out today, either by rolling down the strike or creating a bearish spread. This is kind of a condition we saw today in the VIX market, is that there's an expectation that volatility may fall. We've been holding out the idea that the higher volatility sitting around 20 was in anticipation of a move over the earnings. And now suddenly we're here, and the VIX, being a 30-day volatility measure, is now pushed out beyond this event, but still may be elevated as a result of the election tomorrow. So what can we expect here? We might expect that the current active contract volatility may drop sharply, but that the VIX itself may start to come down rather precipitously. Is it going to a 15? Going to a 13? We don't know. But expect the possibility that we may start to see some VIX selling after the earnings. And what does that mean for the market generally? I mean, if we took things at face value, you might say a drop in the VIX should generally contribute to the movement in the S&P 500. Okay, that's a general takeaway, that a falling VIX oftentimes pushes the S&P 500 higher. Now, as we look at the drop or decline in volatility in early October, from the 10th through about the 20th of October, did this produce that sort of result? Okay, so we look through like kind of 5th here through the 20th. Notice that we had an initial kind of boost to the market, but that the amount of movement we were getting out of the market was not exactly bullish. We just kind of spilled out sideways after seeing an initial positive move on the 9th and the 11th and the 14th, and then we saw things dissipate. We could very easily see that as the VIX gets crushed, we may only see a very moderate amount of upside to the market generally, or maybe no upside at all. We probably wouldn't expect the market to sell off hard unless what? We just see that sudden drop tomorrow, maybe over the next few days. The VIX doesn't move, and then we start to reset for the downside. And that's what we got to watch for here, right? So while tomorrow's movement may not necessarily be altogether big, and maybe not in a few days, but if the VIX sells off, right, the VIX declines, and the S&P does not really engineer any sort of significant upside, we might again start to see a reset in the volatility markets of more downside being priced in. What would that downside look like? Well, if I take a ratio of 3-month to 1-month VIX, right now we're sitting pretty bullishly down here below 1. We're looking at the yellow line, the ratio of 3-month and 1-month volatility. We're at 0.98 right now. If we start to see selling in the VIX, this line could go up sharply. As you can see in the past, it's sometimes reset very, very fast, back up above 1.2. This is what I'm watching for. I'm watching for that if the VIX starts to fall, does this ratio of 3-month to 1-month volatility push back up into dangerous territory, maybe in a matter of days as the VIX is coming off and the 3-month volatility remains relatively elevated. And we get to a point where 3-month vol is 20% higher than 30-day vol. Okay. We look at skew. Okay. Skew declined on Friday, if down to about 146, which is still high. The general trend has been lower. If we start to see the VIX come off, what is the market's response to this? Do we see more hedging activity stepping in which case this line goes up, responding with the falling VIX is increased hedging? Or do we start to see the bottom come out of skew? Maybe the candidate that the market expects to see more calm waters economically, and maybe they can pull off the hedges a bit. The only problem is the thing that's preeminent in creating volatility is the Federal Reserve, and they are not going away. What measures are they going to take? What's going to happen to inflation? There's so many things that even if you had a change candidate that you felt was a change candidate, what changes can they enact given the hole that we're trying to dig ourselves out of? Okay? A lot of stuff that structurally is going to be there for a while. It would take a lot of work no matter who takes office to be able to get us out of this predicament. And the problem is the Fed helped put us here in a very significant way, and they are not going away. And they do serve the banks, right? I mean, look at how banks have performed since they cut 50, right? They've been able to pass on those higher costs because why? Well, the 10-year Treasury note yield's risen, right? We just haven't seen this happen like this before, right? The realities of inflation are not solved, and it's not going to be solved no matter who enters office in the near term, right? Short-run inflation is going to remain elevated. What can we really do there? And so the fact that a lot of this stuff is foregone in the very near term suggests that the market can easily go back to its paces, go back to whatever it wants to do, recognizing that it's going to take a while for us to really change anything. And so again, in the near term, we may see things normalize, and the normalization only means the risks are starting to ramp up if we start to see, again, 30-day vol sell off, the ratio of 3-month 1 vol get up to dangerous levels, and we see skew remain elevated or possibly increase as the VIX begins to decline. Well, again, that's kind of a mouthful, right? There's a lot of stuff going on, but again, volatility is the number one thing that we're watching for, right? Volatility to fall. You know, from a trading standpoint, our focus at TheoTrade for a lot of us has been trying to take profits into this event and then making a decision how you deploy those that money's going forward. But today, you know, Smuckers, for example, dividend stock back up against support. I thought this one was kind of interesting just to share one with you that is a little bit longer dated. Sorry, I'm going to change my line style. There's a little bit longer dated picture. But right now it's down, back up against support, pays a 3.7% yield, goes ex dividend on the 15th. If you buy the stock before the 15th and hold it to the 15th, you are entitled to that dividend. They're currently at support. It's a dividend aristocrat stock. It's raised and paid its dividends for over 25 years. And again, with a 3.7, 3.8% yield, you could potentially take that dividend of $1.08, buy an option out here at $1.05, maybe come out of pocket a little bit. And guess what you have? You have a married put where you have the upside, maybe five, $10, $8 of risk down to 105 where you can sell it. But the upside here, if you're right, and again, maybe the earnings come out positive, maybe we have a shot at getting to 160. Again, for a dividend aristocrat stock. So one of the areas that I've been looking at recently and sharing in some of my sessions, we're looking at dividend aristocrats. We're looking at for stuff that's paying dividends, and we can buy a hedge with the dividends. This is one of those issues that you can handle with Smuckers by using that married put strategy. So we'll wrap it up with there. So again, may your dreams come true. No, I'm joking. But the point being is that we'll see what's going on with the election in the coming days to weeks, hopefully sooner than later. And again, we'll be able to see and gain more clarity after the election as to how this is going to shape up. And then we can go from there. And it'll live